Hello and welcome to Real Day Trading. All right, so what happened today? Well, yesterday I sent out a video of a little bit of a rant, I guess you can call it. So much that I had people messaging me asking, "Are you okay? Do you need to take some time? Go have some quiet reflection?" Yeah, no, I don't need that at all. Well, maybe I do, but it had nothing to do with the rant. Let me show you why I made the plays I made yesterday, which turned out to be extremely profitable. So this is SPY. You see a lot of lines here, I'm sure. Let's look at these first two horizontal lines. Let's call these lines of horizontal support. We have the bottom of the July 20th candle right here, comes neatly right across. And then we have the bottom of the 920 candle, which connects with the bottoms of all of these, peeks through a bit, but pretty much flats across here. A little trap corridor there. Look what happens every time SPY tries to dip below it. This is your danger area right here, right? If it stayed down here, that would be a problem. That would be bad, but it didn't. Pop back up. Then on Tuesday, try it again. Nope. Pop back up. Then yesterday, where we saw all the institutional fuckery, it tried again, but it didn't really. It brought it right to the line. Pop back up again. Same thing today, right? And you're looking at this line here, which is right around 429.50. Every time it goes to that level, pops back up. You have fairly solid support there. But yet when you listen to all the pundits, they're talking about the collapse of the market and danger zone and the volatility. And yes, the market is moving in a much wider range right now. The ATR on SPY is much, much wider than it was. You have a lot of volatility. Volatility is good for day trading, by the way. Notice you also have an upper bound here. If you draw your upward sloping trend lines of the high volume candles, you have one here, comes in right above the 50-day moving average, right, 100-day moving average around here. And you have another one that goes back. That one there starts at 3.5. You could probably start it at 3.4, same slope. And then you have another one here at October 30th, 2020. And here you see SPY is really on the lower end, but still right in this channel. Now, when it pops up over here and starts to break through the 50 and gets into this channel, now you have a very bullish market. And for the moment, this is going to attract buyers. The fact that sellers cannot break through. And in fact, yesterday and last night, they had the perfect opportunity to do it. The FOMC, I interpret it as dovish, but you can find an excuse for anything. So they could have easily tanked SPY here. And if you looked at the futures last night, a lot of people were like, oh my God, it's the end of the world. That was going nowhere. Obviously, this morning, what happened? We gapped up. Then we dropped back down again, right? We can look at the 5-minute on SPY here. Let's take a look. 5-minute on SPY. And so you see, we dropped here, right? Steady drop, steady decline, but once again, did not break through. Tested it, tested, did not break through. And now we have Apple. And bam. I told everyone, by the way, right before the close, hey, the 10-cent options, I never suggest out of the money options. They're fool's errand. And I certainly never suggest options over earnings. So what do? I suggest an out of the money option over earnings. I suggested the 175 Apple for 10 cents. Why? Well, one, it's 10 cents. And you're not going to get much IV crush off that. But two, Apple and the market can feed off each other. On what can happen here? If Apple had a positive earnings reaction, which it did here, right? SPY is going to respond. Apple by itself is a huge part of the ETF, right? So just by the fact that it is going up alone is going to drag up SPY. But the fact that it's going up and had such strong earnings is going to give institutions the reassurance they need to continue to buy. So they're going to feed off each other. And what happens at a certain point, and that point is right about 440, right about this 200, right? So 442. Yeah, it's still around $9 away, but the way SPY's been moving, that can go fast. If SPY breaches that, you might see a melt up. And that, if melt up happens tomorrow, for example, what will happen is you will see, and it might be temporary, but you will see a stock like Apple, all of a sudden, let's put this here on the daily. Here's Apple, right? 169 is the 50. That's the last area of real resistance. It's also going to intersect with this downward sloping trend line. So you have strong resistance here at 169. If the melt up of a market gets Apple to break 169, this thing will soar. You could see 175 in a flash. That's why I recommended the 10 cent out of the money options. As for the plays I made last night, well, take a look. Last night, Apple, despite after the FOMC, the absolute downward selling pressure from SPY, and we can see here, SPY yesterday, this here is just here go like this, and zoom in that. Here we are. This here is after the FOMC. You could see absolute crushing drop, right? Apple drops, but so that's SPY. Apple here drops, bounces right off its 100-day moving average. So right here is where I entered those calls. Right after this double bottom technical confirmation, it is not breaking through support. Despite the heavy selling, it is not breaking through support. Look at Microsoft, the other calls that I made. Yesterday, oh my, same thing. Hits the 200, bounces back off. Where did I buy? Right over here, right after confirmation. And what happened? Well, I was able to sell my Microsoft, which I got for around $14 for $20.55. Huge profit. I was able to sell Apple for $11.30. So both of those plays, despite their appearance of being emotionally driven, which they were, because I'll admit the position size was probably a little foolishly high, but each of them were confirmed and based in the technical analysis of one, the story of what SPY is doing, two, the bouncing off support, both in SPY right here, Apple and Microsoft, all doing the exact same thing, being brought down to exactly the level that would freak out enough retail investors that they panic sell. But if everyone is panic selling, why doesn't it break through support? Because institutions are buying. That's why. And so that's what you see have happened here. I made a lot of money off those calls. And of course, a lot of people were curious. This seems to go against what you teach. This doesn't make sense. It's exactly in line. It was confirmed, it bounced, levels of support. Trading isn't just about finding, oh, this stock is going up. It's going up stronger than SPY. I'll buy it, hope SPY goes up. It goes up, I made money. There are many different ways to trade and many different ways to spot opportunities. When you see something like this, and a stock cannot break support, or an ETF cannot break support, there is a reason for it. Buyers aren't letting that happen. If sellers had control, which it looked like it was here, you would not see this. Okay, so now we go into tomorrow with Apple strong earnings. The currently at least S&P futures are surging upwards, and I am long a number of stocks. I am long Netflix, obviously, averaged down a little bit more on that, but still long. I am long NVIDIA, still on calls that are, this would really need to pop tomorrow for NVIDIA to do anything. I'm long ADM. Let me take a quick look at ADM here. You can see, look at that daily chart on ADM. You got a new all-time high breaking out of horizontal support. ADM is a great stock. Love this pick. I am long Dollar General. Look here. Dollar General, not a great pick probably, but it was surging on high volume earlier today, and it had some decent relative strength on the SPY drop over here. So I took a flyer on Dollar General. Not sure it'll work out because we also do have this trend line right here, which will offer some resistance. Sorry about that. So Dollar General, I will keep an eye on. Amazon, I have a butterfly. Now, normally I do bracketed butterflies, but because I am bullish, I did a single leg butterfly, call butterfly here. If Amazon gets to 3,000 or anywhere near it tomorrow, I am going to get roughly, oh my God, like 40 to 1 on that. So I like butterflies because you can take profit even though you're not in the zone pretty easily, and they really pay off on the final 2 days. So you do a butterfly on Friday for the next day, it's usually you can get really good returns on them, because what you're looking at with butterflies is a really high ratio there. You know, for $3, I entered into a 2950, 3000, 3050 butterfly, which is a $50 spread. So if Amazon gets to 3,000, let's just say tomorrow, because the market is going up, we get a melt up, all of that, then my 2950 calls are worth $50. My 3,000 calls that I sold against it are worth 0 because it's a 3,000. And my 3050 calls are worth 0. So I have one call left, 2950 worth $50. I paid $3.25 for that. So I will get $46.75 potentially on that play. That is a 15 to 1 return, right? So that's the potential on a butterfly. I'm also in UNP. The option's still further out. There is some resistance here. is floating around between the resistance and its 50-day moving average. It's still on top of the cloud here and hasn't broken through. I'm going to give this one a little bit more time, but along with Dollar General, I would not put this in a trade I'm going to have much patience in. Okay, that is the recap. SPY is going up. Apple is going up. Everyone is happy except for bears at the moment. Look at Apple almost at that 169. If you see Apple go past 169 tonight, that is a sign that tomorrow it may really fly. So I hope you all have a good night. If you don't understand what I just said, or you want to know more, you do know what you can do. You can read the damn wiki. Have a good night.